that were lower as well.
EY has analysed the results of the 6 major banks in the country. Banks' assets growth turned negative for the first time in 20 years. Strongest pressure remains on fee income. Net interest revenue was solid. Banks were very careful in terms of lending, leading to credit impairments at similar levels compared to the previous year, despite the challenging environment.
Essentially last year was a year of very little growth, and of course because banking is affected by the whole of the economy, if there's low growth or no growth in the rest of the economy, that has a big impact on the bank's ability to do business, because obviously as jobs are created, that creates more demand on the retail side. As businesses invest and new businesses are created, that creates more demand on the business corporate investment banking side as well. So if we look at headline earnings growth of 6.6%, which was the average for the South African banks in 2016, we think that's quite a decent number when you put it in the context of 2016.
2017 holds much promise, with the operating environment improving. Economic growth is slightly up. The drought is dissipating and inflation is expected to return to within the 3 to 6% target range. With the ongoing competition authorities' investigations, banks will likely face more public scrutiny.
In terms of costs, obviously, if there is, then there'll be some form of fine, and we've seen a couple of banks settle already. But I think the broader context for that investigation is there is going to be a move under the Twin Peaks regime to a split between prudential and conduct. So we'll probably see more scrutiny around banks' conduct as that regime gets off the ground over the next few months. So certainly that will cost the banks in terms of compliance, because as conduct becomes more of an area of focus, it doesn't necessarily mean that the banks change their conduct, but they will be required to demonstrate that they are compliant, and there's certainly a cost to that.
Banks are optimizing branch networks as the digital platforms are favored, leading to more investment on the digital front. They are continuing to grow their networks across the rest of Africa as the continent's growth potential remains a major attraction for major banks. Banks increased employee numbers by 3% in 2016. Gloria Safako, SABC News, Johannesburg.